I've, as an investor, lived through 25 two-year periods. If it takes me 2 years to see the silver price go from some number like 20 to some number like 50 or 60, if it takes me 2 years to see the high quality silver companies triple and the best of the leveraged silver companies to go up 10 for one, I'm okay with that.
Well, you've often said that you're more of a commodity speculator, and two of your favorite sectors are, you've said many times, are uranium and silver. Are those still your two favorites, or are there some other commodities you're watching at this moment?
It depends on who you are. If you're an investor, not a speculator, if you're an investor, I prefer oil and gas. Uh, because the companies are generating so much cash and they're so cheap. And the industry as a whole isn't investing enough sustaining capital to maintain production. So that circumstance continues. As a speculator, certainly the upside volatility is in silver and uranium. Uranium is so volatile right now, you're almost forced to be a trader, which is not what I do. But you see these stocks go up 30 or 40% in 3 or 4 weeks. And you see this incredible euphoria. Mm-hmm. And then you see the stocks collapse. You can almost understand how to trade uranium stocks by watching the number of views that my uranium YouTube interviews get. If the interview is over 30,000 views, you should be a seller. And if the interview is under 6,000 views, you should probably be a buyer. That isn't what I like to do. What I really like to do is buy something deeply out of favor, participate in a couple placements, and sell it 5 years later for a 10x. That's sort of my preference. But the truth is, if somebody gives you more than you deserve in 4 or 5 weeks, you're probably duty bound to take it. Silver is a different circumstance. The luster is off silver, pardon the pun. And I love that circumstance. I love circumstances where very high quality development names like Silvercrest are off by half. And I'm prepared to believe it might take 1.5 years or 2 years for silver to find its way back into speculative favor, which is fine for me. I'm 69 years of age. I've, as an investor, lived through 25 two-year periods. If it takes me 2 years to see the silver price go from some number like 20 to some number like 50 or 60, if it takes me 2 years to see the high quality silver companies triple and the best of the leveraged silver companies to go up 10 for one, I'm okay with that. And the fact that I can sit back at my leisure for the next 6 or 7 months and not be rushed into decisions because I'm competing with 10,000 morons in the market, it's just a wonderful circumstance. We can take a look at a company. I can have the geologists sort of digest it. We can let the lawyers look at it from a community relations and ESG point of view. We can do our own work in terms of the interplay between the balance sheet and the income statement. Look, as an example, at how much money is spent in G&A relative to assets under management. Do all the kind of work that you're supposed to do before you invest. And that level of due diligence was impossible to do 2 years ago because the stocks were moving too fast.
Well, you mentioned Silvercrest, and that's a big name. It's a really high quality asset that I think it's about to come onto production and they're ramping up to 12 million ounces a year. Is that one of the, and you're right, the stock is way off. It's gotten sold out, thrown out with the bathwater. And there's good names like Silvercrest that have come down a lot. Is that the type of name you would tell people to take a close look at? A high quality producer like that?
Most people, yes. Look for something where maybe the story is behind the company, or something that sold off just because it stopped going up. There are a bunch of people who own Silvercrest that have no idea why they owned it. And the consequence of that is that many of them sold it, not having the courage of their convictions. If you've spent as much time on Silvercrest as I have, and if you've had the benefit of being part of Sprott, which was there from before the time it was public, you can have a reasonably high degree of confidence. If you see a deposit that's absolutely positively going to grow, which it is, and you see a deposit that's in the quiet period leading up to production, which it is, and you see it in a sector where the commodity's out of favor and you think it's going to go up, and you think as a consequence of that, that after the commodity goes up, the sector's going to re-rate. If in your own mind, you are willing not to have too much psychological verification, I think that it's not unreasonable to look at a 5-year 5-bagger. And that's sort of fun.
Yeah, their cost of production is ridiculously low, way lower than the industry average. And that's really what you want to look for a silver play, correct?
Well, it certainly gives you coverage to the downside. If it takes longer for silver to recover, those guys make a lot of money at $18. I happen to believe that on a nominal dollar basis, that in the next 5 years, silver trades north of 50. And so I always run myself a $20 case, and then I run a $25 case, and then I run a $50 case. And I do valuations on a matrix of pricing assumptions. Ironically, the companies that don't make any money at all at $20 are the guys that generate the largest pro forma increases at $50, which is to say the inefficient producers offer more leverage.
Mm-hmm.
But I'm inclined to look at both my upside and my downside. And if I have circumstances where at $20, I don't have a downside, I can afford to be a little more generous with myself in terms of what upside I'm willing to take. And I think Silvercrest is a wonderful example. I didn't mean it as an example to be a stock recommendation. It's because I don't know everybody in your audience. I can't give them recommendations. But as a learning exercise, the value proposition around Silvercrest is, I think, instrumental. Another name, just for educational purposes, would be Pan American. Hammered in price. Hammered, I think, because of the real expectation of increasing political risk in Mexico and Peru. Hammered partly because 55% of their revenues are gold now, not silver. Interestingly, all kinds of operating leverage in the company. And importantly, 2 deposits in the company which don't figure into the market capitalization because they're not producing. One in Guatemala, Escobal, 500 million ounce deposit, high grade deposit. The other, the name escapes me, Navidad in Argentina, 500 million ounces. If they receive the go ahead on either of those deposits, they could more than double Pan American's production. To have that sort of leverage baked into the company, but not baked into the market cap, is an unusual opportunity. And it's the kind of opportunity you only see in markets like this.